Hi, everyone. We will wait for a few more people to join in. Once again, welcome. This is Docyt's webinar on multi-entity businesses and how they can leverage AI to run an efficient operation and prepare for growth. My name is Sid Saxena, and I am co-founder and CEO of Docyt. We have been building this tech company in Silicon Valley for a good part of the last half decade. This webinar is a result of assisting and helping out dozens and dozens of small businesses who eventually grew into multi-location, multi-entity franchise businesses. So I'm going to be sharing a little bit of the best practices that we have learned, as well as a little bit of challenges that we have seen some of our customers go through. So with that, let's get started. A little bit of housekeeping before we go on. This webinar is getting recorded, and we will email this recording to each one of you. If you have any friends who can benefit from this webinar and the content we're going to be sharing, please feel free to share the recording with them. You can submit questions anytime during the session. There is a Q&A link on your menu bar. Please feel free to click on that. Please feel free to send chat messages as well. And as I said earlier, I would love for this to be an interactive session. You can wait until the end of the session or feel free to raise your hand. And I would love to hear from you if you have any specific questions on the topic or the slide I'm on. All right, so let's keep going. High level, the agenda for today, we're going to talk about multi-entity accounting challenges. We are going to go a little bit deeper into the digital transformation of the back office. What does that mean? How does that look like? And why even you all should be thinking and considering digitizing your back office. Then we're going to look at some real life use cases. We're going to also go over a success story from a Docyt customer. And then we will, of course, leave a lot of time towards the end for audience Q&A. All right. The very first thing I would like to get started with is understanding each one of your specific context. From our experience, what we have seen is each of these size of customer or entity base that you manage has different kind of challenges. Folks who have less than 10 locations versus folks who have 10 to 25 locations, 25 to 50, or more than 50. Each of these growth stages bring their own challenges in the management process, in the people process, in how you maintain your profitability. So I absolutely would love to understand your specific scenario. And then we can go a little bit deeper into specific circumstances if we find out that most of you are in a certain grouping. So please go ahead and respond to the poll. Okay. So one of the first things I wanted to talk about was challenges that we have seen our customers face when they have embarked on a growth in their management structure. This is where you might have 5 to 10 entities, maybe more than 10, or maybe you are part of a experienced management firm which have more than 10 to 20 entities that you're managing. These typically show up in franchise businesses. Now, most of you are probably from the hospitality domain, but as a product and as a company, Docyt supports 15 plus industry verticals. These could be quick service restaurants. These could be retail stores. These could be also digital storefronts. Whatever kind of a business environment you have, the accounting challenges in the back office are pretty consistent. Of course, the number one challenge that we see is delayed books. Bookkeeping delay often is a people problem or a process problem. People problem from the perspective that businesses may not have dedicated individuals, an internal bookkeeper, or the person who understands the specific nuances around your business and is consistently able to do the month-end closing. From the process side of things, the data may not be flowing in to your bookkeeper in an efficient manner. Maybe the revenue data is missing. Maybe the bank statements are missing. All of these together create a scenario where the books get delayed. Now, consistently, we see about 3 to 4 weeks after the month has ended as the period when businesses are able to receive books. So if you receive your books more than 3 weeks later, then absolutely there is an area of improvement possible in your bookkeeping process. If books are delayed, that gets into the second point where financial insights also get delayed. Now, it's very interesting if you think from the perspective that bookkeeping as a process was supposed to be the starting point of financial analysis. But all of us struggle so much to get our books on time that by the time the books are delivered, the next month's bookkeeping process has to start. So we are not able to get the real insights into the key financial ratios, into the key growth metrics, into the operational metrics that can help improve profitability. So because of delayed books, the financial insights into business performance, even that area gets delayed. The third key challenge that we have seen folks struggle with is a centralized data control. Now, many of you might be using QuickBooks or some other systems. A lot of small business owners, as they become savvy operators of a large quantity of locations, they still struggle with giving their team access to powerful data. A business runs on the strength of the management team. The more information, the more data your team has, and the better metrics and goal that you set for the team, and the transparency around those metrics, they can actually help improve profitability for your businesses. So how can you think of providing access to data that again determines the business success? The fourth important thing is a lot of businesses are not set up for the industry vertical they are in, and many of them do not track key metrics and ratios. Also, their income statement may be a typical standard QuickBooks export statement, which may not have the industry specific metrics. What this does is, yes, you know the net income, the gross operating profit, but you may not know the unit economics of your business, how much you are spending on your general and administrative cost per unit of item that you are selling. Finally, the last point that we have seen many times are compliance-oriented challenges. These could be franchise compliance. These could be IRS-oriented compliance, simple things like vendor W-9 collection and 1099 processes, but also goes into areas like sales tax-related compliance. Are you collecting the right amount of sales tax, and is all of that getting paid to the government? Making sure that these things run on time, your licenses and permit related payments go out on time, your property tax payments go out on time, so that each of your locations stays compliant. Another important area that multi-location operators have to really control and figure out are these three categories. Number one is your back office system. Now, the back office system has a lot of money-oriented moving parts. What is your revenue system? Most of hospitality vertical, they have a property management system. Quick service restaurants have a point of sale system, and so forth. When you are collecting your revenue, how are you actually reconciling that revenue against the deposits that are coming in? Do you have a person or a process in place to track that? Is that a manual process? Bill pay. Vendors really hate when they receive money late on bills after 30 days. Are you on top of your vendor relationships? How does that work out? Typically, the revenue and the bill pay system in a traditional brick and mortar business, there's a physical back office where all of this is managed. Corporate credit cards and receipt collection. If your general managers have corporate credit cards, how are your process to collect receipts? And if you do not collect receipts for a large amount of bill or purchase that happened, and if there's an IRS audit, how does your process look like? So all of these are important processes that have to be structured, tightened up, and have to run like a machine in your back office. Finally, when it comes to your people and processes, The important areas where you have to tighten up things, especially when you are scaling with multiple locations, are unit economics. For your specific location, what are the one or two key unit economics that you're tracking? What we have seen in most of the small businesses, supplies are typically 30 to 40% of gross margins, and labor and payroll is another 40% gross margin. So almost your 70 to 80% gross margin are going into these two large areas. Are you tracking unit economics on all of these areas? Are you creating a budget? And then is your team able to follow your monthly, quarterly budget and make sure that your gross operating profit is in line as per budget? Payment process. How are you paying your vendors? Credit card, checks, ACH transactions. All of these payment processes require control. Who is able to generate these payments? Do you have checks that go out of your location, or you want to send digital checks? Revenue management. How does the process around very quick turnaround on changing your revenue process, your pricing for the items that you are selling, when you see that your gross operating profit targets are not going to be met? Or maybe if you have excess in your budgeted revenue target, maybe you can relax on some of the processes or bring in some of the bills. So all of these processes have to be structured. All of this goes towards the most important objective, which is your profit maximization. Do you have an incentive structure in place for your team? And does your back office financial processes like bookkeeping and your income statement generation, does that feed into your incentive structure? Is there a sales commission oriented process that you're following? And if there's a sales commission process, does your team know how they are doing on their daily and weekly performance? All of this goes towards the key approach that we're going to talk about today. Step number one, digitizing the back office, and step number two, using artificial intelligence. Now I'll explain a little bit what I mean by that. Everything that we talked about in the previous slide. Today, most businesses do some or all of those things in a manual fashion, which unfortunately means that you need to have a large workforce. And of course, when humans do some of that stuff, there's delay and there could be errors. The number one thing, if you don't already do it, is completely digitizing your back office. What that means is you should be using software tools to manage your expense management. You should be using software tools to reconcile your daily revenue. And if you deploy artificial intelligence in a proper fashion, then your month-end closing should be continuous, not waiting for the month actually to end. Now there are tools like Docyt that actually can allow you to deliver continuous reconciliation of your bank feed so that your income statement can go live. I'm going to show at a very high level an example screenshot of how the Docyt product looks like. This is an environment where you have multiple businesses, and every line item over here is a digitized business where every single bill, every receipt is getting converted into a digital PDF. And that allows AI to extract information. On the revenue side of things, each of these businesses is connecting to a relevant point of sale system. So instead of a human doing daily or weekly revenue reconciliation, AI can actually get your POS report at the end of the day and then continuously reconcile against the merchant processor deposits. When expense and revenue data is digitized, the reconciliation, month-end closing, bank and credit card reconciliation, all of these processes can also get automated. So as I was mentioning in the previous slide, step number one is ensuring that your back office is completely digital, which also allows a centralized management team for a multi-entity scenario to observe what's going on a per location basis. Let me know if there are any questions so far, and feel free to raise your hand. I can go in detail if you have any questions or doubts. So once your back office is digitized. And if you're using a tool like Docyt that uses AI to extract information, to keep moving the data forward, so your bookkeeping process is continuous and not waiting for the month to end. Essentially, what that does is the combination of a digital back office and AI-powered bookkeeping, it delivers a live view into not only your profitability, but also key unit economics and financial ratios. So if you are a hospitality business, your gross operating profit per occupied room or per available room becomes real time. If you are a quick service restaurant or a general restaurant, then your plate costing on a daily basis can be real time. So you can quickly change directions on your pricing for your key items that you're selling. What this allows you to do is, in real time, when you are seeing your unit economics, you can actually figure out ways to tighten up your operations and do cost savings. You are also saving tremendous amount of time in your bookkeeping process. And finally, as a management team for 20, 30, 40 locations, however many you are managing, now you can make faster and smarter decisions. You may want to offload a location, which may not be performing as per the remainder of your portfolio. Or when you know your unit economics, then you can make a better judgment if you're buying a new location. If that new location meets the standard that you have achieved in your portfolio, then you can actually negotiate better when you're trying to make a purchase for a new location. Finally, when you are having a team that is helping you run this portfolio, you can actually provide key access and key targets to your team, where now you have brought in additional team members who help you achieve these profit metrics. So we are going to go a little bit into those kind of details now. I'm going to walk through a few use cases and showcase how AI-powered bookkeeping can actually deliver all of these kind of values. One of the first areas when you have a multi-entity, multi-location portfolio, the value comes in expense management. Now, folks who may have 10 to 20 or more locations, they also have partners in the business. Whenever you are purchasing supplies, there often are cases when a single bill has come in for 5 of your units. Now, you may pay the bill from one of the location's bank account, but to keep expenses accurate, it is a good practice. And of course, you should be splitting up that bill or that credit card purchase across your locations. This is just good bookkeeping practice. But in a typical manual process, a bookkeeper has to go manually inside the balance sheet of all 5 locations and create journal entries and accrual entries on due to and due from. That's a lot of manual work for just one bill. Now imagine if your GMs have a corporate card and they are buying supplies. They go to Costco and of course they're going to buy supplies for multiple locations from the card belonging to one location. In Docyt, since every single location is connected, whenever such a bill comes in, it takes a few clicks to split the invoice or receipts and even a bank transaction or credit card transaction into as many splits as you want across multiple locations. You can even set vendor level splits where whenever a vendor bill comes in, Docyt can create a split automatically. So all of this goes towards good expense management practices when you are managing a portfolio. All of this also assists in continuous reconciliation in a proper fashion. And then at the end of the month or quarter or at the end of the year, you can do your inter-entity settlement so that now your locations, all the due tos and due froms are cleared out. This particular thing can also extend into liquidity management. There are often cases which we have seen in portfolio level management where bank account of one entity is being used to transfer some money to bank account of another entity because it was running short on cash. Some management structures also do a sweep in and sweep out of excess capital from operating locations into the management entity. All of these processes have to be documented extremely precisely on the balance sheet, especially if you in future are considering selling any of your locations. That cleanliness is going to deliver wonders at the time of closing, where transparency is going to be appreciated. Payroll is another example. You may have most of your team on the management company payroll, but some of the team members who are exclusive to a certain location, you may want to split their payroll information based on the specific location. So all of these splits across entities become possible if your back office is digitized, if you're using a powerful system like Docyt, which has all of these capabilities by default. Second use case that we have seen delivers a lot of value is actually bringing in your team and giving them very tight roles and permissions into specific areas like bill pay or receipt management or even high-level operator reports. This is where you are actually enabling your team to shoulder some of your responsibility on profit management. You, of course, may not want to give full P&L net income level visibility, but if your general manager or manager of a location knows your target for the month for gross operating profit, now they actually can make live decisions on the ground to maybe delay a particular bill because it may not, it may exceed your budgeted targets on expenses, or they can tighten up some incentives with the revenue team to increase your top line revenue number. This distributed way of shared responsibility is typically done at the enterprise level. Big enterprises are really good at making VP level and department level heads owners of their P&L. You can also do department level P&Ls. If you have a revenue team in a system like Docyt, you can actually give very tight access to a specific department P&L to a specific individual, and they will not get to see your summary operating statement. So this kind of access control, and also if you have integrations coming in where, let's say you have credit cards, corporate credit cards connected, then your team gets to see the transactions on the credit card only for the cards that they own and manage. This level of visibility makes people accountable and provides the management group assistance towards the profit maximization target. Once again, please feel free to ask questions, but we'll keep moving over here. I'm going to go into a very important use case, which is industry-specific reporting. Now, this is a key learning that Docyt, has gotten out of the hospitality vertical. Hospitality vertical is actually a tremendously structured area where accountants over the past 30, 40 years have actually created powerful standards when it comes to financial reporting. In the hospitality industry, one of the standards is named USLI, which stands for Uniform System of Accounts for the lodging industry. We took this learning and we deployed this learning across 10 plus other verticals, quick service restaurants and whatnot. Now, what's so unique and special about hospitality reporting? If you look at the image on the right side, the summary area actually brings in all of your KPIs from the point of sale system. A typical export out of a QuickBooks or NetSuite or Sage does not have this kind of data. This requires a little bit of specialization in terms of reporting. Similarly, if you are a quick service restaurant or if you're a gas station, similar KPIs could be brought into your income statement. The second key thing that works is department level accounting. At SMB level, if you go to an external bookkeeper and ask them to do the hard work of multi-department oriented bookkeeping, either the price is going to be jacked up or they're just going to raise their hand. This is the power of an AI system which is continuously looking at transactions and figuring out this vendor belongs to which department or where should a particular transaction should fit in which department. All of this comes naturally inside the Docyt platform, and our system is able to create custom mappings as per the industry verticals need. All of these KPIs can also be looked at in a unit economics fashion. So one of the pop-ups that you are seeing over here, you can select, this is a hospitality vertical operating statement. So you can select per available room, or you can switch to a per occupied room. You can also add comparisons against specific budgets or last year's P&L. All of these capabilities allow you to see how your specific location is performing. And if you have a multi-entity management system like Docyt, you can even see comparison across locations, which is the next image that I wanted to show. So this is an example, and this is actually the most important best practice when it comes to managing multi-entity portfolio. So in this, you are seeing 3-entity structure where you are seeing the income statement. You also are seeing the unit economics of per occupied room, and you are seeing each line item based on a specific department. From this income statement, you can keep drilling down up to a specific chart of account, and again, you can see all the details compared across entities. But where the ultimate success comes in is if you look at the row that I'm highlighting, administrative and general, and if you look at the column POR, now you can start seeing how much money on a per occupied room basis you are spending on general and administrative kind of spend. And you can even see that your entity 3 is actually doing better compared to entity 1 and 2. Now, this level of insight can allow you to really take a screwdriver and tighten up the nuts and bolts of your operating process. You can go talk to the GMs or managers of other locations where the unit economics are not as clean as some other location. You can do internal training. All of this is towards the goal and objective of improving your net profitability. So this is the ultimate objective on how our AI-driven bookkeeping system can deliver value. Now, if your bookkeeping is live, which is what the Docyt system is designed to deliver, then you are able to run these reports in real-time fashion. And you can see across your portfolio how things are going. Another example is just high-level dashboards. These are, again, access controlled, depending on if your business partner needs to see it, or if your key manager needs to see it, or even if your lender needs to see it. You can share specific metrics in a visual fashion, and your team can actually drill down into some of these charts and see actual reports and export them out into Excel and share if needed. So this level of control on your own data can only come when, number one, your back office is digitized, and number two, your bookkeeping is happening live. Another example is labor. This is what I mentioned earlier. Almost 40% of your revenue typically goes towards running a payroll. Having a very tight control on overtime hours, on wastage of hours if you do not have any specific area where your team needs to go and work. All of these things can save real money from your net income. This report can also be run on a multi-location basis. So you can again do comparison of wages, and you can see wages on a per occupied room basis, overtime wages on a per occupied room basis, how many hours are being spent. You can see various functions like front desk, maintenance, housekeeping, and this can be deployed on a quick service restaurant or gas station. So all of those kind of insights become possible when there is no data silo and when there is an AI system able to get this data and reconcile it so the reports become live. Let's talk a little bit about a customer success story, and this is coming in from one of my friends, Jatin K. Shah. He manages Bluegrass Hotel Group. Jatin has been with Docyt for, I think, over 4 years now. And when he first came to us, he had a tremendous bill pay problem where he had hundreds and hundreds of bills coming in multiple locations. He did already had a decentralized team. Some people on the location, some people outsourced in a cheaper destination. But overall, his team was spending somewhere close to 100 plus hours per month just on expense management, which is primarily bill pay, but also receipt management of credit card purchases. This team was managing and reviewing over 300,000 to 400,000 in monthly expenses across their check writing, their bill pay system, their credit card usage. And they had very basic QuickBooks style P&L. So they were not able to see any of these KPIs, unit economics. They did not have the USLI 11th edition style of industry specific reporting. Once Docyt got deployed, immediately the automated bill pay, the data extraction capability, the automatic categorization of the bills, it saved them 50% of time on the manual review. Additionally, an AI system like Docyt is able to automatically connect a PDF bill with a credit card transaction if that bill was automatically paid by credit card. So there's continuous reconciliation happening. And now your credit card transaction actually has documentary evidence in shape of the bill PDF going into the accounting software. So this is what continuous reconciliation means, where you can upload all the bills, drag and drop, you can throw in all the receipts, and when the AI system finds the right transaction, it immediately matches the document with the transaction. Additionally, the integration to bank and credit card feed also reduced their time towards delivering bookkeeping. Their financial reporting got automated. We brought in industry style reporting, which satisfied their franchise corporate requirements. So all of that resulted in tremendous amount of time and money saving. I think we have arrived at the end of the presentation. We do have a ton of time for audience Q&A. This is where you get to probe me and ask me on any questions that have come in your mind throughout this presentation. I'm happy to answer any of them. So please click on the hand raise and we will enable you to mute or send your question via chat. Okay, so Nari has asked a question, does Docyt interface with procurement software? So today, Docyt does not interface with procurement software. Mostly what happens when you use a procurement software is typically you might have a purchase order process or you might have a receipt coming out. So we absolutely can absorb those documents, but currently we do not have live visibility into a third-party procurement system or process. We would love to go deeper into that flow. If you can share the name of the system that you use, we can do an offline conversation around integrations. Okay, another question came up around walking through the bookkeeping software. So this is where, I would absolutely love for all of you to send an email on to contact@Docyt, and we will give you a dedicated one-on-one demo of our accounting suite, where we will also showcase all of this functionality to you. So please feel free to schedule a session with our sales team. You can also scan the QR code that should take you into the demo booking process. Any other questions? Okay, another question, payroll integration. Fantastic question. So Docyt has deep API integration with a few payroll partners. Examples are Gusto, and then Paychecks, and we are developing with ADP. When you use any of these systems, we also have time clocking integration. When it comes to Gusto, we have Deputy as a time clocking integration. If you use a Docyt partner, then all of your labor reports become real time. Docyt software is able to pull in via APIs real time, daily, weekly, semi-monthly, monthly reports out of the time clocking system and the payroll system, and is able to generate your labor report. So we do integrate, and we are constantly adding new integrations. So we would love to hear what payroll system or time clocking system you use, and we can prioritize some of those integrations if you don't already have that integration. Another question that came up by John is, does Docyt sit on top of QuickBooks? So absolutely, we do use QuickBooks as the general ledger underneath. But what we have seen is, unless there's an extraordinary situation, most of our customers, they just need to use Docyt for all purposes. Docyt has all of the workflows like bill pay, revenue reconciliation, your month-end closing, even your bank and credit card reconciliation happens inside Docyt. But yes, since there's a QuickBooks underneath, we are continuously syncing every single document you are sending into Docyt with QuickBooks. All your invoices, all your receipts, everything goes inside QuickBooks. So you are getting a pristine QBO being built underneath, which is the power of the Docyt system. Please keep the questions coming. I really love all of these questions. Anything else that comes in your mind as a curiosity around a multi-entity system? Okay. I think, okay, there's another question by Neri. Is there a night audit dashboard for the GM? So yes, one of the dashboards that I was showing you, which was for the multi-entity. So there are dedicated dashboards on your ADR, RevPAR, occupancy percentage, and for your general manager. We actually have the capability where any of these key metrics can be put together, and the GM can be given access to such a dashboard with constrained access. So they will not be able to see any of the reports or income statement balance sheets, but they will only be able to see the specific dashboard that has been constructed for them. So this dashboard, again, provides all the information that a night auditor or the GM would need. So we do have all of that information. All right. Any other questions? John, Neri? We also have Anish, Ila, Holly. Any questions from your side? And feel free to raise your hand if we will unmute you, and we can also do a quick interactive Q&A. Okay. Looks like there are no other questions, which brings us to the end of this session today. Thank you so much for taking the time out, each one of you. In case you are interested, as I mentioned earlier, please send an email to contact@Docyt or call this phone number and we will set you up with a demo. We have an exciting roadmap that is coming in the product. We will also showcase some of those future capabilities. With that, thank you so much for taking the time out. Bye.